Welcome back, everyone. Today we're diving into something very exciting happening with NIO stock, which has been absolutely blasting higher, even during pre-market trading this Monday. The momentum surrounding the company has been building rapidly. Optimism is spreading among investors, and the discussion around NIO's future potential is starting to heat up again. In this video, I'm going to break down the latest comments directly from NIO's president regarding the production pace of their flagship ES8 SUV, and then I'll take you through two bullish stock price scenarios that could play out by the end of this year. The first is a realistic yet ambitious price target of $15 per share, and the second is a far more optimistic target of $30 per share. Both of these outcomes are worth analyzing because they highlight why many traditional analysts are completely underestimating what is actually happening on the ground in China. Too many analysts are sitting in offices in North America or Europe, disconnected from what's happening in the Chinese EV market, and as a result, they're simply wrong in their assessments. So let's break this down step by step. This is not financial advice. Please do your own research. Recently, NIO's president traveled to Beijing where he met with a group of NIO owners and enthusiasts. This was a face-to-face session where people asked him tough questions about the company's outlook, especially regarding profitability. When pressed on whether NIO would finally reach profitability in the fourth quarter, he didn't make any direct promises. As the president of a publicly listed company, he explained that he could not disclose specific financial results ahead of official reporting. But what he did say was very telling. He made it clear that management remains optimistic about achieving profitability in Q4, and that once the quarter ends, the numbers themselves will speak for the company. However, when asked about the ES8's production capacity and whether supply could keep up with growing demand, his tone shifted to absolute confidence. He reassured owners that production ramp-up for the ES8 is already well underway, that NIO is carefully watching order volumes, and that they are adjusting operations to ensure they can fully capture this demand. His message was essentially, "Do not worry, the ES8 will be produced in the numbers required to meet strong orders, and NIO is fully prepared to capitalize on that momentum." That kind of confidence directly from leadership is very encouraging for both customers and investors. This brings us to the price targets. Based on everything happening with NIO, we can look at two bullish scenarios. The first is a target of $15 per share by year's end, which would already be more than a doubling from where the stock trades now. The second, more optimistic scenario is a price target of $30 per share, which would represent a five-fold increase from current levels. To some, these targets sound unrealistic, but history suggests otherwise. During the 2020 and 2021 EV boom, NIO's stock experienced an incredible rally, proving that such explosive moves are not impossible. If circumstances align correctly, lightning could strike again. The key problem is that most analysts are underestimating NIO because they simply don't understand the dynamics inside China. Let's take Deutsche Bank as an example. Their projection assumes NIO will only sell about 3,000 ES8s per month. But based on what we're hearing from NIO's leadership and observing in the market, that estimate is wildly off the mark. Here's the reality. In the current market, if a customer's budget is around 400,000 RMB, they're overwhelmingly choosing the ES8. If their budget is closer to 300,000 RMB, they're still leaning toward the ES8, but often with a battery subscription model, where they rent the battery instead of buying it outright. And for those with a budget closer to 200,000 RMB, they're choosing the Envo L90, which is positioned as a more affordable family SUV. This structure effectively funnels a large percentage of customers toward the ES8, making it a blockbuster choice across multiple budget tiers. Many buyers who once would have considered the ES6, EC6, or even the ET5 are now shifting their attention toward the ES8, given its stronger value proposition. That's why the president revealed that ES8 orders have actually surpassed those of the Envo L90. And this is critical because the L90 itself is already delivering around 2,000 units every single week. If that's the case, then the ES8 is positioned to potentially deliver 3K units per week, not per month. That translates to about 10K ES8s per month, which is more than 3 times higher than what analysts are currently predicting. If that happens, the ES8 alone could become a major driver of revenue and profitability. Combine that with sales of the Onvo L90 and the upcoming Onvo L80 later this year, and NIO's lineup is set to generate strong sales momentum. But more importantly, the ES8 is a high-margin vehicle, meaning its sales will directly support profitability in ways that lower-margin models cannot. Now let's address the delivery targets. Officially, NIO has set a goal of delivering 440K vehicles in 2025, which breaks down to about 50K units per month. Realistically speaking, I don't think they're going to hit that number, it's just too aggressive. But here's what a lot of people miss. Failing to meet delivery targets does not necessarily mean failing to achieve profitability. In fact, if you look at 2023 and 2024, NIO delivered far more cars in 2024 compared to 2023, but their losses actually deepened. Why? Because expenses increased at a faster rate than revenues. Deliveries only matter if costs are kept under control, and that's where the real story lies for NIO right now. Across China, NIO has been aggressively cutting costs to improve margins. Their service centers are already profitable. They've shut down unprofitable retail locations, reduced headcount both in their sales network and at headquarters, eliminated costly freebies and perks, and introduced stricter cost discipline across the board. Even Onvo stores are under review, and if the rent is too high, the company is quick to close that location rather than waste resources. This shift toward efficiency is going to play a huge role in driving NIO toward profitability, even if their vehicle deliveries fall short of ambitious targets. For investors, that's the piece of the puzzle that matters most. So how does this translate into stock price? If NIO becomes profitable in Q4, the stock could easily re-rate to around $15 per share because profitability changes the entire market narrative. That's the moderate bullish case. But if NIO somehow manages to scale up and hit delivery levels closer to their official targets, which, again, is a stretch, but not completely impossible, then $30 per share by year's end comes into play. Beyond that, the long-term story is even bigger. NIO has built a powerful moat with its battery swap technology, which no competitor can currently match at scale. They've also invested heavily in research and development, creating advanced in-house technologies such as the NX9031 chip, which allows them to operate independently of NVIDIA. If NIO can secure partnerships to license this chip technology or even license their proprietary software, it could open up entirely new revenue streams. We already know that McLaren is planning to integrate some of NIO's tech, which suggests that other partnerships are very possible in the future. Imagine if NIO signs agreements that allow other automakers to use their chips or battery swap infrastructure that would instantly change how the market values the company. These long-term possibilities show why investors who only focus on short-term deliveries are missing the bigger picture. So here's the bottom line. NIO stock is once again gaining momentum, fueled by optimism and by real confidence coming directly from company leadership. The president has reassured both customers and investors that ES8 production is ramping up smoothly and that profitability in Q4 remains a realistic goal. Analysts outside China are underestimating the scale of ES8 demand and therefore misjudging NIO's trajectory. Deliveries might not reach the official target, but with aggressive cost-cutting, profitability is still within reach. If profitability happens, $15 per share is a very reasonable target, while stronger deliveries could push the stock toward $30. And beyond that, NIO's long-term moat with battery swap, self-developed chips, and software licensing opportunities could completely transform the company's revenue streams in the years ahead. For investors, this is a story that is just starting to unfold, and the next few quarters could mark the beginning of another historic run for NIO stock. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.